Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special report on the Cullen Fund. Today it announced that it had made a loss of $716.5 million in the last year. I want to explain to you today why that's a good thing. This is the fund set up by Michael Cullen, the Finance Minister, in 2002 to start saving for our retirements collectively. So it's got a long-term investment horizon, around about 20 to 30 years. The idea is we put in a couple of $1 billion every year for the next 20 years. We invest that and we've got a nice big nest egg that we can use to pay our pensions when we all start to retire in 20 or 30 years' time. It's a great idea, one that the Labor government should be proud of, and we can be sure that whoever follows the Labor government won't change it. At least that's what they've told us anyway. But now let's look at what happened this year. After 4 very good years, this is the first time the fund has lost money. Obviously, the global financial markets have been in turmoil for the last year, and the fund lost $716.5 million. But it actually increased in size. It went from $13.1 billion to $14.1 billion, largely because the government kept topping it up, as it does every year. It started off with 4 very good years. 2003, 4, 5 and 6 were excellent. Got to the point where it actually returned more than 14% per year. Now that average of return on investment is down to 10.3%. But you've got to remember that's still 3.5% above the risk-free rate of return, what you'd get if you put your money into treasury bills. It's actually above what would have been returned if the money had been put into passive investment funds. One of the complaints many people have about investment managers is that they actually don't do better than if you simply parked your money in an index fund. But the New Zealand Superannuation Fund has actually done better than an index fund. It's used its size and its relatively low costs and its ability to diversify it right around the world to ensure an excellent return. Let's have a look at where it's invested. Nearly 1/3 of its money is invested in large global stocks. So stocks listed in New York or London or wherever, but not New Zealand. Only about 7.5% of the money is invested in New Zealand stocks. 10% in property, 20% in what they call private investments. These are private equity funds, forestry, these sorts of things that you and I can't get access to. They can because they have the size. They have 17% invested in fixed interest, so that's bonds. And it turns out they haven't lost any money on subprime directly. That's because they tend to go for more investment grade credit. But they have lost money through the flow-on effects of the credit crunch into the value of many large stocks, and New Zealand Superannuation Fund has not been immune from that. Interestingly though, it has made a little bit of money by lending its stock to short sellers, those people who sell the stock before they own it, buy it back later on, and make a profit on the difference when the share price is falling. But the New Zealand Superannuation Fund stopped lending those stocks out, particularly for financial stocks, before the Australian, UK and US authorities banned short selling of financial stocks. So what is the super fund doing right now? Are they retreating into their shell and not investing because the markets are a mess? No. As Adrian Orr, the head of the New Zealand Superannuation Fund, said, he sees the global markets as a bit like a big supermarket with a huge for sale sign outside it. He says he's going in there with a trolley to fill up on all these discounted assets. So he's going out there buying right now, which is a good idea. The New Zealand Superannuation Fund really is the one great legacy of Dr. Michael Cullen's government, and it should be allowed to stay. I'm Bernard Hickey. That was a special report on the Cullen Fund.